standpoint. Now let's bring in Schwab's chief investment strategist, Sonders, who joins us with her view. So what are we to make, of, and what are you making of the headlines that have been moving over the last few days and the way the market's been reacting?
Well, obviously, the inverse correlation between Brent oil and the S&P has persisted. It, varies a little bit in its direction. But I think what we're seeing is now that we're in what has been sustainably, at least the duration of the war, high oil prices. I think what traders are now betting on is a little bit of asymmetry, that if this drags on, we probably see a continued grinding higher in oil prices, but that the downside to oil prices, if there's some sort of resolution, whatever that looks like, is more swift. And that's why you see these sharper moves on the downside. And those have been the days where you get a lift in the equity market. But I think we're still very much at the mercy of oil, which is at the mercy of conditions in the Strait of Hormuz, even if there's trading around potential de-escalation, even though we don't know the details of what that looks like.
Well, jumping off of how you finished that, I mean, the market doesn't seem to be too concerned with the vagaries around these apparent talks, wherever they're taking and with whomever they're happening. We just have very little to no detail on that. So how do you deal with that as a market observer? I mean, the market clearly is at least willing to give some benefit of the doubt that maybe this is not going to be as protracted as once feared.
Yeah, I think that's the case. I think it's sort of a mouthful of teas here. If you go back a year, you had, Trump's tariff tantrum taught traders taco. And I think whatever taco looks like, and the difference, of course, this time is it, in essence, is going to take three to taco this time, given we've got the United States, Israel, and, of course, Iran, whereas a unilateral decision was able to be made to delay tariffs a year ago. But for whatever reason, at least short-term traders are still making that bet on de-escalation and tend to press it. Also, markets have been moving on a day-to-day basis, having almost everything to do with positioning. You get these short-term traders that want to, get the shorts to be pressed. You see it even in asset classes like gold, where you'd had the parabolic move, then the selling kicked in. You're kind of pressing that on the downside. So there's a trader aspect to some of these short-term, even intraday moves that aren't necessarily framed by narrative changes or underlying fundamentals.
No, but the market, as you said, has learned its lesson from past instances about the so-called Trump put. You suggest that it's still very much alive and well. It would obviously show itself in the fact that this market stabilized from the moment the president sent that Truth Social post on Monday morning pre-open, and we've gotten a little bit of follow-through since. At least we've tried to, but if anything, it's kind of kept the market from going down in any great magnitude because you're afraid of what might happen next on social media.
Yeah, and it is a clock race here because, as we all know, the longer this lasts, not just the more sustainable high oil prices we have to deal with, but the ripple effects become significant. This is a very unique military crisis as it relates to oil because of the choke point that is unique about the Strait and that there are no other options. So storage filled, production has had to be shut down, not to mention some of the military action causing some of the dislocations in LNG. You don't have a situation where you can now just ask OPEC or OPEC Plus to boost production because that's also at the mercy of the Strait. We're talking about fertilizer, which feeds into crops. That has implications for the cost of food. We're not seeing that in the numbers yet, particularly heading into first quarter reporting season, not in the earnings numbers, but at a point where we start to get meat on the bones. Okay, what is the economic impact here? What's the inflation impact? What is the earnings impact? And you don't get an actual resolution, then I think you could see the dislocations in the market last beyond just short-term inverse relationship to Brent oil prices.